Thanks so much for tuning in to Talking Point. I'm your host, Neeraj Shah. Well, Asian Paints actually doesn't need any talking points. The market gave its verdict on the numbers in Tuesday's trade. The questions to Mr. Amit Syngle is about whether surprises can become a part, positive surprises can become a part of almost every quarterly disclosure or no. And the commentary that he gave post the numbers as well. That's just a brief questions on that. Mr. Syngle, great having you. Thanks so much for joining in. I hope all is safe.
Yeah, thank you so much, Neeraj, and it's always a pleasure to be with you.
Thank you so much, sir. So let's talk about the key point that stood out for me, and maybe I'm mistaken, but please correct me if so. But you saying that the domestic decorative business more than doubled its volume in that brief para that you gave out post the numbers. This one kind of stood out for me. One wouldn't have anticipated this, though the base effect is in play, but still, this is well quite a bit of a surprise, positively you might add. And do you reckon that this is the beginning of a momentum that could continue into the quarters ahead?
So, okay, what we see is that, yes, it's been a very good quarter given the circumstances were not very great this time because of the second wave kind of coming in. So 105% volume growth and 95% value growth is definitely great. And that also coming on a bottom line possibly, which is also great to that extent overall. But how we see is that, if you look at a CAGR number and a CAGR number over a financial year 18-19 kind of goes to something like about a 15% volume growth. Now, which only kind of shows that there is a certain consistency with respect to our batting, with respect to volume growth, which we are showing, which is kind of reflected in the solid strategy in terms of what we have been taking over the few years to that extent. And that is something which is getting reflected in this quarter as well. So, one thing which is very clear going forward as well is that we are convinced that we are doing certain things which are absolutely right in terms of the market. So whether it is in terms of the upgradation strategy, whether it is in terms of new products, new areas, in terms of what we are taking up, I think it is giving a very strong impetus in terms of getting us this volume growth going forward. And we think that this is a movement we started literally about a year and a half back in a very strong manner, and this will continue. And this is something which possibly you will see in further quarters to come, that this kind of growth trajectory should continue.
Super. I'll come to the causes for that as well. Just a quick brief on the quarter that went by before that. The gross margin being low as it was, probably the lowest in some 29-30 quarters. You reckon, the street believes it's not a concern because the raw material prices probably have cooled off from the peak. What would your verdict be here?
Yeah, I think I would agree in terms of saying it's not a concern because, there has been a sudden inflation which has been very, very high. Right from Q3 end of last year, we could see it was a 10% hike, and then there was a further hike in Q4. And when we saw Q1 over Q4, it was almost like a 15-16% hike. Okay, so you can imagine that we would not like to burden the consumer immediately by taking a hike of that proportion, because what it does is that it imbalances the market, it creates confusion in terms of rates which are there to that extent, and it also kind of worries the consumer immediately to that extent. So I think we are very clear that given the fact that, it is only at a point in time this is happening, that we should be able to kind of come back to our original band in terms of what is there to that extent going forward. And we are taking further increases over and above what we have taken in Q1. And we feel that it is a matter of months before we quickly get to our band in terms of what there was earlier to that extent. And we also expect some softening of prices as we kind of go ahead. This cannot sustain the way it is kind of going. So overall, I think it's not a cause of worry.
Mr. Syngle, what has July shown thus far? If you can briefly tell us in terms of, because of the push and pull factors, right? You have high prices as well, and did I hear you say that you'll probably continue to do that? And at the same time, your release yesterday speaks of a fairly strong demand push that started from the month of June onwards. So how have been these push and pull factors thus far in the month of July?
So what we see is that, the demand impetus kind of really continues in the first fortnight of July as well in terms of going forward. We also see that there is a certain elasticity in terms of pricing, which the consumer kind of really looks at to that extent. And that is why we are looking at a gradual kind of an increase which happens in terms of the pricing, because the consumers enters the cycle of painting at different points of time to that extent, and therefore we don't want to kind of really give a jolt to the consumer in terms of very high pricing at a certain point of time to that extent. And therefore this gradual increase, I think, should not kind of really affect the demand which kind of comes in. Had we done at one shot a 10% kind of a hike, it would have definitely made people sit up and see in terms of whether they need to do it now or they need to kind of defer it to another 6 months to see when prices come down. So I think this strategy has really helped in terms of, one, balancing the demand and not really kind of disrupting it to that extent on the lower side. And we see that in July, the impetus really continues to that extent. And there is a larger positivity in the market because of the monsoons kind of being predicted as being normal to that extent, and therefore a longer festival also coming into that extent. Yes, there is some dampening of news which kind of keeps on coming with whether the third wave will happen, not happen kind of a zone. But I think now people have taken this in stride, and I think the demand conditions are pretty good.
Actually, so let me combine all of that into one. We are entering into a block of two festive season blocks, so to say, right? For the next 6 months or the next 5 months, arguably. You reckon, I mean, as difficult as it may be, but do you reckon that you might be confident of an improved showing quarter on quarter for the next couple of quarters?
Yeah, I definitely think so, because, today, as you have seen in the last year, we also see now the whole pent-up game kind of still brewing up in the quarters which we see coming forward, as was the game last year to that extent, because May was quite bad, actually, if I see in the 3 months of this thing, and May to that extent was literally almost no sales, if you look at it. It's kind of April and June which has come up, and April also, maybe the second fortnight was a little bit subdued because the markets started closing around 20th of April to that extent. So I see a good 40-day period where basically the demand has got subdued in the quarter one. Some part of it we saw in June, but I see that more parts of it happening as we kind of go ahead in the quarter two. And given the fact that it's a long Diwali, I think that's the other factor which will kind of contribute to the Q2, Q3 volumes.
Okay. There were some fears, Mr. Syngle, that because, I mean, and all of this is, of course, viewers assuming that there is not a serious wave 3 for us, hopefully. But Mr. Syngle, just a quick thought, and actually kudos to you, despite these second waves and all, you actually doing well. So I'm sure the higher multiples are reflective of that there are certain businesses, consumer facing, which are able to do so well despite this COVID things which are helping. But just one quick follow-up question, Mr. Syngle, and that is, there were fears of downtrading by an Indian consumer, an average Indian consumer, because of wave 1, possibly wave 2, because savings have gotten lost, etc. Your results are not showing any evidence of that. So can you tell us a bit about that? Are you seeing evidence of some bit of that or not at all?
So if you analyze Q1, I think it's very interesting because last year, what we saw during the lockdown, it was the T3, T4 cities which were growing at a higher pitch, and metros T1 and T2 were down. Okay, this time we saw something reverse. We saw the metros T1, T2 bouncing back very fast to that extent, and T3, T4 have been lagging, actually, if you see from the point of view of the COVID ingress being far more there, and the damage which has been there is far more, as we see from the last year to that extent. So I think this itself has shown us that the metro T1, T2 cities are growing at about the 30-35% clip, higher than T3, T4 cities to that extent. Now that's a big one in terms of what's really happening, which has also given us a lot of growth overall, because the T3, T4 cities are still growing. It's not that they're not growing. It's just that the variation between the metro T1, T2 is bigger to that extent. And secondly, this, as far as we see the product mix going in, to some extent, we find that even in T1, T2 cities, there has been a little bit of down trading which has happened. It's not that it is absolutely zero. There's a little bit of down trading which has happened. But given the overall growth, it has really compensated for that down trading which has happened to that extent. And therefore, I think that is something which is definitely observable in the market to that extent. But going forward, I think it's a mixed bag. It is too early to see, because if the market really opens up, I don't think so that the customer is going to kind of resort to any down trading to that extent. And we are already seeing that there is lots of money in the environment, because the stock market is really going not, in a very big way, and all IPOs are getting oversubscribed. So there's lots of money in the market. So no reason to down trade as I see it.
Yeah, well, every Asian Paint shareholder would be very happy for sure, Mr. Syngle. One final question to you, and that is something that a lot of people talk about, that how your database helps you in managing your supply chain really well. I mean, a certain fund manager from Marcellus has been on record as being the poster boy of your database management, so to say. My question is, that helps you, even if that helps you in your paints business, which I would love to hear from you, but does that help you in any fashion in all your newer businesses? Because now you're no longer, even though they're very small categories, but you're no longer just a paints company. You're between the walls as well in a big way.
So yes, given the fact that now we've made the transition from the share of surface to a share of space within the homes in a very strong way, I think a very strong and robust databasing and data mining system has always really, kind of helped us. Coupled with that has been the ingress of the latest technology framework, which kind of comes over it. So I think today, one of the big reasons of the Asian Paints supply chain has been the kind of technological framework which rides it with, kind of gives us a very, very strong avenue to forecasting what the customer really demands. And therefore, I think this forecasting ability really gives us the leverage with respect to reaching out to the customers in time and servicing them at a certain frequency, which really keeps the whole business dynamics alive in a very, very strong manner to that extent. And today, going forward, we have leveraged the technology from even kind of understanding the consumer consumption patterns in a very strong manner. And therefore, we are looking at cross-leveraging a lot of businesses to each other, so that, for example, when I do a sanitization service, I would pitch him a painting service. When I go for a painting service, I would pitch him a home decor service to that extent. And I think the leverage kind of continues, so that you are able to kind of really take a customer during the customer life cycle to that extent, rather than looking at a certain point in time to that extent. And this kind of can help happen only when you have technology with you, you have a very, very robust CRM frameworks which kind of work for you. And that is something which Asian Paints is appropriating and will keep on appropriating, because we would like that we continue to be, taking the latest technology, whether it is using AI, whether it is using machine learning, and that is something which is our endeavor in terms of going forward.
Well, I'm out of time, so I have a few other questions which I'll probably do the next time, Mr. Syngle. But thank you so much for speaking to us today and giving us your thoughts. Really appreciate your time.
Thank you, Neeraj. It's always a pleasure to be on the channel.
Likewise, sir. Thanks.